Cryptocurrencies have quickly become an interesting and exciting new asset class, but one that presents unusual and unique challenges to traders. In this video, we talk to three principals at CMT Digital as they highlight both the opportunities and challenges that arise in cryptocurrency trading.
CMT got involved in the crypto space in 2013. I brought it up with the founders of the firm that I thought Bitcoin may be interesting from an investment standpoint. They thought it was kind of hysterical that suggestion was coming from their lawyer. Our investment thesis is really that there's a lot of infrastructure that's currently missing in the space. So we look to invest in that missing infrastructure or in companies that are supporting infrastructure development in the space. That then is coupled with where we think we can be strategic. One of the biggest pain points we have is this lack of prime services. Our counterparty risk assessment that we go through at CMT is pages long, asking questions like your hot and cold wallet storage procedures. Have you ever been hacked? I mean, it's a very extensive list. But what we did was essentially a gap analysis, and we said, okay, how are we regulated in the traditional markets? And let's just hold ourselves to those best practices and standards in the crypto space. Crypto markets are open 24/7. You can't move US dollars over the weekend. So trying to figure out that has been interesting. You also don't have forks like with IBM stock. So that's been something unique that we've had to manage too. There's a lot of technologists that are building these new solutions without a legal or regulatory background. So having those discussions early and being able to identify those issues, the legal background has been helpful, but I certainly didn't expect that this is what I would be doing with my legal career, which isn't even being a lawyer anymore. I do believe that, and I do believe it will likely be Bitcoin, could lead to the most significant democratization of money that we've ever seen. And I always think it's funny to kind of show that I believe in that. I have 3 kids, a 13-year-old and 2 12-year-olds, and they each have wallets with Bitcoin in them, but they don't have bank accounts.
Probably one of the more challenging aspects of trading in crypto is the combination of a fragmented liquidity environment and the lack of a prime broker. So actually we've had to build a technology platform that's very flexible, allows us to hit interesting exchanges which seem to appear within a couple of weeks. Suddenly they're like number 1 on the liquidity list, We need to be able to connect to those exchanges very quickly. Some of them will give you an order book every 20 seconds and that's it. But there's not many algos I know of that can trade on an exchange where we can only get one order book every 20 seconds. And when we place an order, I want to see an order accept. If I'm doing it in crypto, it's going to meander across the internet and the exchange itself might be overwhelmed and it might give me an accept in about 30 seconds, if I'm lucky. On some particular exchanges, and in some cases you never see an accept at all. Probably 90% of the code I used to write was just business logic, and maybe 10% of it was defensive. In crypto it's kind of the other way around. You write 10% of the code assuming everything's going to go right, and 90% of the code is defensive, just assuming the counterparty is going to do silly stuff. We're in very early days here, very, very early days, and everyone's trying to predict the future and all the money's piling in. It's all just so it's crazily early. I can't imagine another asset class coming along in my lifetime. So this is a really interesting brand new world here. I feel like I've been doing this stuff for 20 years and I've seen how things evolved and I understand why they evolved that way. And now I'm almost seeing it again starting from scratch and evolving in the same way but at like a ridiculously accelerated pace.
Cryptocurrencies trade 24/7, so there is no trading day where you check, you clock in at 8 o'clock in the morning, you clock out at 4 because that's around the time the markets open and close. That creates scheduling issues, timing issues, figuring out how to best use not only the actual capital but the human capital you have at your disposal to manage a trading desk. The fee structure, some of these products have a big impact on the liquidity on these exchanges, which is a lot different than traditional markets where everything's sort of gotten to a point where it's standardized to a degree, where the differences between different exchanges and different products and the fees and liquidity around those products create some interesting market dynamics. In traditional markets, you sort of park your assets at your clearing company and they sort of manage all of the touch points for you. Where in cryptocurrencies, if you want to sell an asset, you actually have to have it on the exchange. Crypto markets are still in their infancy. Even though Bitcoin's been around for over 9 years now, there's still a lot to learn and a lot for the industry to grow. And in developing our trading desk, we've sort of seen a lot of the gaps in the infrastructure. We've seen the hurdles we've had to overcome. I think as time goes on and some of these solutions, as the markets mature, that there's going to be a big future for cryptocurrency assets.